What's up, guys? In this video, I'm going to break down the difference between long-term investments versus short-term investments and why we chose to go with the short-term investments. All right, let's get into it. The short-term and long-term, they both have the same type of foundation. You have to understand some primary principles of real estate investing if you're going to get into either, right? For long-term investments, one of the main things you want to know about long-term investments is what is your debt service or what is your mortgage payment going to be. That really determines, if it's going to be a great investment, because the next question is, what is the rental market? All right. You have to know those two in order to get into investing and know if it's going to be a good investment or not. The only difference with the long term is that you have the appreciation side. That's like the extra, right? That's, some markets it might appreciate a whole lot more based off the development. Some markets maybe not. Some markets are just great investments for long term, and they appreciate on the average. But for first time investors, all right, if you're looking to get into long term or short term, normally you're using a FHA loan or a VA loan, primarily because those two loans allow you to get into the investment with minimum down payment. You also have the USDA in that category, but if the USDA, remember, those loans only are good in rural areas. And I don't think you want to invest for cash flowing investment or a long-term investment in a rural area. I just don't think the rental market will be there for you using the USDA loan. All right. And so using an FHA and VA loan. Now, I want to say this. Of course, the FHA and VA loans, you have to live in the property, but at some point we'll be transitioning this property over into an investment. So you need to understand, will it cash flow? So knowing your debt service, your mortgage payment, and the rental amount would determine if it'll cash flow. The most important part about investing long term for first time home buyers is going to be the interest rate. That's going to be the most important part, because that's going to determine if your vehicle will cash flow or not, the interest rate. Otherwise, you'll be dependent on the appreciation, right, and the equity that it will build. On the investment side of the long term, you can also always take advantage of the depreciation of that investment, over 27 years. Now, that's the long-term investment. We decided to transition our properties over to short-term investments. Well, a portion of them into the short-term investments because of the cash flow. Cash flow is the biggest thing, but let's break it down. Just like the long-term, right? You want to know what your payments are. Same thing for short-term. You want to know what your payments are. The only difference is you need to know, instead of like the monthly rent, you need to know what your daily rent is on the short-term rental side. Some of the key points to the short-term rental, I'm going to go down the list. I jotted down some notes just to keep me on track of some pointers that I want to point out. The day rate, right, in the mortgage, same as long-term. The appreciation, right? Normally the short-term have very slow to no appreciation, right? Very slow to no appreciation. There are certain times in the market where the total market in general will appreciate, but most cases, the short-term rental properties, they just don't appreciate or as fast, or it's a very slow appreciation. And it's mainly because there's no stability in the short-term rental market. There's always new investors coming in. There's always old investors getting out of it. All right. So you always have it's a high volatility in the short-term rental market. Cash flow is important. The main reason you get into short-term rentals is for the cash flow. If there's not going to be appreciation and equity there on the back end, then the main focus for short-term rentals is cash flow. All right, you're really going to be dependent on the cash flow. Now, these things I want you to pay attention to. When you're getting into short-term rental, I want you to understand your market, right? Don't try to just build out a portfolio with a range of bedrooms, like a 3-bedroom, 4-bedroom, 7-bedroom. Understand your market. If it's a 4-bedroom market, then understand that market, master that market before expanding out, because that's going to give you the basis of how you can build out a portfolio. All right. So don't try to scale too fast. And so if you have a Airbnb, or if you have your short-term rental is a 3-bedroom, then you need to know what your 3-bedroom nightly rates are. Right. Your 3-bedroom nightly rates. Now it's going to be different from any particular area. So, one area, it might be 125. Another area might be 150. Another area might be 225. Another area might be 250. So you need to know what your nightly rate is for your 3 bedrooms or 4 bedrooms, whatever your investment is. Also, occupancy percentage. You need to know what the occupancy percentage is to determine what your expected monthly income will be. Right? That's going to be important. If you know what that percentage is, then you know what your max offer price should be on your type of investment. So if you're a 4-bedroom, then you'll know what your max offer price should be for a 4-bedroom short-term rental. And this sort of caps you off at, it helps you understand how much or the max you can make an offer on any property for a short-term rental in the market, and where it'll cash flow. Like, you'll keep yourself within that formula to where you can always be beneficial, or it can always be profitable in cash flow. Now, you'll see once you get this foundation together for your Airbnbs, you'll realize there's a lot of properties out there that's listed above that max offer price, and you'll find signs like, all right, that would have been a bad investment, even though it's short-term rental. So all short-term rentals don't cash flow, right? Because some people are just asking for too much for an Airbnb when the numbers are not there. So you have to know those bottom line numbers, so you're not the one that overpays for an Airbnb because the numbers are not there. Also keep in mind, short-term rentals, you have higher operating costs. You got to pay for the utilities. You got to pay for maintenance. You got to pay for repairs. All these things you need to keep in your budget. And I have a whole nother, and I'm gonna say this. If you're getting into short-term rentals, right, just go ahead and pay for a mentor, coaching. Like, it's hard to get into short-term rentals, cold turkey, and not having experience in some of these things that I'm talking about. Some of the benefits, though, to the short-term rental, in which we liked, and which is another reason why we went the short-term rental route, along with depreciation, you have cost segregation. That is a more detailed line of depreciation. So to give you an example, what cost segregation looks like, it's like when you get your appliances, right? When you get your flooring done, when you get your furniture, when you get all your fixtures. Now you can really get some nice things price point wise, and spend a little money, because you can break it down. Let's say, for instance, your appliances, you can depreciate over 5 years. Your flooring, you can depreciate over 5 to 7 years. Your furniture, you can depreciate over 5 to 7 years. Your fixture, you can depreciate over 7 to 15 years. So they give you an understanding of like all these upgrades and renovations that you would be doing in your short-term rental. Well, you can actually write that off, and you can depreciate it against the income that you're going to make. And then you also take advantage of it with accelerated depreciation. So there's a lot of benefits. So you should know exactly what your expected monthly income should be for your short-term rental. And that should give you the max offer price on any short-term rental that you're looking to purchase, or to give you the range of what you should be looking for as far as buying. And you'll be able to identify if the properties are overpriced, or if there's an offer there, or that potential. And then also understand that cash flow is king with short-term rentals, right? There's some, depending on where you are in your investment portfolio build out, you may do one short-term rental, but you may have to do long-term rentals in order to build out your portfolio and then transition it over later. And I'm going to do another video talking about that aspect of it, like how to build out a short-term rental portfolio and the strategies for that. There are some key things you want to have in place with your short-term rental, such as a line of credit. I'm gonna do another video talking about that, the financial aspect behind it, and having that right support and resources in place for your short-term rentals, because it's a lot different. Long-term rentals, you don't have to worry about utilities, right? The tenant's going to put the utilities in their name. You don't have to worry about, a lot of maintenance and repairs, because if the tenants make the, damage to place, then they pay for it. Maintenance wise, depending on what you negotiate with the tenant, you may have to service the AC unit, or some things what you negotiate, but for the most part, your tenant is going to take care of a lot of those items. Short-term rental, you have to have a budget for that, all right? And so look, short-term versus long-term, there's pros and cons to both sides. Long-term, you can take advantage of the appreciation. You're going to have a higher appreciation. Short-term, you're going to have a higher cash flow, right? So for me, if I'm looking at four bedroom properties, I would say on an average annually, 4-bedroom property will probably produce around anywhere between $3,600 to $2,400 to $3,600 a year in annual revenue, right? That's based off the average rents. Well, for a short-term rental, based off of my average monthly expected income, then you should be looking at somewhere between $55,000 to $70,000 in revenue. And in some cases, you can get above that. So that lets you see the difference in the cash flow from anywhere between 24 to 36,000 to 50,000 to $70,000 in cash flow. But remember, the short term have higher operating expenses as well. Well, look, if you have any questions, you're looking to purchase a short-term rental property in Florida, all right, or in Georgia, be sure to reach out to myself or our team. We look forward for the opportunity to earn your business. All right, you can reach us directly at 786-277-1190. I'm Emmett Combs. I specialize in short-term rentals and investment strategies. If you like this video, be sure to hit that like button. And also don't forget to subscribe for more updates.